Hey everybody, it's Jake Moran with Keller Williams, and this video is going to walk us through a couple key things to pay attention to if you're in the market to do anything buying or selling in the balance of the third quarter that we're currently in 2022 or the fourth quarter. It's kind of a hard conversation to have with people because we got back to a fairly normal market really quickly. And most of us that have been in the realm of reality or paying attention to anything in the real estate world, the last 2 years have not been reality. We've had interest rates in the 3%, and on the flip side of the equation, that has spiked the appreciation that some of us have enjoyed a lot and has made a really competitive environment. We made a quick shift in June. Between May and June, the interest rates changed about 2 percentage points, which was kind of a e-brake, if you will, on some of the escalation that has gone on in the real estate market. So I'm going to show you actual numbers. So if you're talking to real estate agents who maybe sold, 4, 5, 6, 8 properties over the last year or two, they don't have a clue what's going on. I can pretty much guarantee you that. And this information will hopefully help guide you to make the right decision for you at the right time. It's not the market we were in 6 months ago. It's not the market we're going to be in 6 months from now. And that is true in any market. All we have to do is evaluate where we're at, where we're going, what the actual factors are that are in play, and then you make the right decision for you. Plain and simple. So I'm going to share my screen with you. I apologize that I'm going to do the leave it kind of here in the setup mode. So it's not actually a slideshow, but what I realized is when I do the actual slideshow view, I lose my mouse. I don't have a cursor anymore. So just for the sake of keeping everybody on the same page, looking at the same things, we're going to go through this together. So we're in August 2022. We're in the dead middle of August 2022. And the question for everybody is, where is the real estate market? This is an actual screenshot. So these are not doctored reports or anything like that. This is a back-end software system to Georgia MLS. So Georgia MLS is operating pretty much all over the state of Georgia in terms of listings and data tracking and all that kind of stuff. There's more reports and functionality on here than most of us will ever need or use. But for the sake of this is a price reduction report. So these are your dates over here, 6/1/22 to 8/15/2022. Roughly 75 days, the last 75 days. 1,626 price reductions in that 75-day period. Now, if you don't know anything about real estate in Georgia, you hadn't been paying attention, that number is kind of innocuous. It doesn't really mean anything to you, okay? It's important, and we're going to show you why. The 6 months prior to that, January 1st to June 1st, 335. So we over 1,600 in the last 75 days and 335 in the 180 days prior to that. Anyone want to take a guess? I pulled a report of all of 2021. You ready? 7. Now, what this doesn't mean is the sky is falling. What this does mean is you cannot just name your price anymore. That's what these 3 slides mean. This means the market we've been in the last 2 years is gone. There are not going to be 16 offers within 12 minutes on every property just because there's a for sale sign. So now it becomes a much more strategic conversation of where are we positioned in the market when we decide to list. That's where you need an agent like me who's going to pay attention to what's going on, what's happening, what's your competition, when did things close, and really give you a good evaluation on what is going on. This is contextually looking at the same time periods, okay? So over here, 2021, at the end of the year, interest rates, all other things being equal, you're at about 3.25 for a 30-year conventional loan. 90 days later, you're at half percentage point above that, roughly. 90 days after that, you've escalated 2 full percentage points. Like I said, it's a huge jump historically in a short period of time. And this is kind of just your synopsis of those 3 slides we looked at in the beginning. All of the average of 2021 over the calendar year you're at about just under 3% on an average conventional loan for 30 years. Currently, you're almost double that. Okay. If you're buying or selling, you need to be aware that we are not in the same game we were even a few months ago. This is your average here. Your average is since 71, so I guess it's actually 50 years. You've got about 7.75. 7.75 current interest rate, which we just looked at, was what? It was about 2 percentage points below that. So this is a long extended average, and we're healthy level below that. So again, sky's not falling, but we're not where we once were. This is where I try to help people understand. On the buying side, you're going to wait for the market to crash. You're going to wait for whatever. You have to understand fundamental economics. I mean, let's go back to like ninth grade economics. Interest rate and price have an inverse relationship. You can see this. You go on bankrate.com, go on a mortgage calculator anywhere. You're going to get these same numbers. Okay. If you have a house that's $500,000, $500,000, all other things being equal, 30-year loan at a 6% interest rate, you're going to pay $3 shy of $3,000 a month. If the market changes and that interest rate goes up to 7%, that $500,000 house is not going to stay at the $500,000 price range. It's not. I mean, look at what's happened in the last 2 years. Interest rates went down. What happened to prices? They went up. That's the relationship they have. So let's say that property goes to 465 at 7% interest. You're roughly paying $100 more for that same house for 30 years. You slide over one more column and it goes to 7.5%. That's going to put that similar tamper on the price. So it's going to come down another $15,000. You're paying $150 more a month every month for that same house. Interest rate is your primary driver. If they go down, you can always refinance if you don't like where the interest rate is at the time you buy. Okay. Really important for sellers right now. The last 2 years, we had one category of seller. One, which is for sale now. My house is for sale. Put it on the market, and you've got a caravan of people through. You've got all people throwing all kinds of crazy numbers at you and in light speed. And we are not. It pretty much doesn't matter what price range you're in right now. We're not in that camp anymore. So for the balance of the third quarter and going into the fourth quarter, it's important that you understand this. There are 4 categories of sellers right now. Those who need to sell, if you need to sell and you want to sell and you want to get it sold, price and condition are going to matter more than they have. You're going to have to adjust your expectations a little bit, that you may need to go in and touch up your trim. You may need to get the carpets clean. You may need to do XYZ to make your house look in a better condition than maybe it needed to this time last year. Category 2 sellers is you'd like to sell. So I'm sitting on a bunch of equity still. Like, okay, the market's come, tabled out a little bit, but I bought, 3 years ago, 4 years ago, 18 years ago. I got a bunch of cash and equity I'm sitting on. Understand, same thing about condition that we just talked about. Your price may need to tamper a little bit depending on what it is and where it is. And expect that your days on market is going to increase beyond what you've been used to or hearing about the last 2 years. 2018, 2019, average sales cycle was about 90 days. So for us right now, that seems like an eternity because we're used to pretty much everything being a 30-day turnaround time on the selling side. But that's not where we're at. And this is why, historically, your listing agreement has always been 6 months, because it usually took 2, 3, 4, 5 months between that day you listed it to when you actually closed. There's going to be a third category of people, which is, gosh, we got a bunch of equity. We've got a great, high demand area. The growth in the area is, gone really well in our favor, and rent rates are really high. So we may just decide to rent our house and have our first investment property, then decide to sell it. If that's you and you have questions, you want to run it by, I ran a property management company for 7 years. I can help you with some of those filter questions to know whether or not that's the right thing for you. Happy to help you if I can on that. Category 4 is we're just going to stay. So sometimes you're going to renovate, sometimes you're not. Maybe you're retiring in a few years, or you just like the area and you were just kind of testing out the market, and you're happy where you're at. So those are your 4 categories. Again, the last 24 months, one category, put the sign in the yard, get it sold, get on. This, super important for you to know. And why, going into the second half of the third quarter and the fourth quarter, this, if you made it this far, I'm going to give you the best the best news insider tip that you may ever get from a realtor. Okay. Getting back to basic economics. This is, here's my cursor. So January 2019, January 2022, you can see our inventory levels. These are new listings. This is the new listing chart. We're almost the same place we were at 2019. 2019 was a good, above average real estate year in Georgia. Important for you to know. When is the best time for you to sell your home? Supply and demand fundies right here. Why? This is the fourth quarter. These dips in inventory. This is the kind of the last 2 months of the fourth quarter every year goes like this. Why? Because a lot of people don't want to show their homes over the holidays. What do you know about supply and demand? When you have lower supply, you have higher demand. What do I know about here? I've told some of my clients this. Next house I sell, I'll sell it during the fourth quarter because I know I have less competition. All buyers buying houses in the fourth quarter are serious buyers. Every one of them. No one is tire kicking in the fourth quarter. And you may only need to show your house one time to get the list price that you want on your house. When buyers that need to buy in the fourth quarter and want to buy in the fourth quarter, they know they've got limited options. They're a whole lot more decisive on making a decision to buy because they know the inventory is limited. This is your little golden nugget here. This is your prime time to sell to highly motivated buyers in the fourth quarter. So you're welcome. Also, have you moved in Georgia in the summer? It's awful. Important for you to know. Also, just a little tooting our own horn here, but these are your Keller Williams offices in Georgia in the Atlanta metro area. Our office is in this bar here, and these are the next 5 brokers in terms of closed volume. We're more than 5 times in closed volume than your next 5 brokerages combined. Suffice to say, it matters who is representing you. That's it for today. I hope that helps. I hope that gives you some tangible, good information. It doesn't mean your house is going to not sell. It doesn't mean you have to fire sale it. It just means if your expectation is you're going to be able to list above where your neighbor listed, or just continue to push the market up. The market isn't pushing. The market's not following you. So be aware of that. Be cognizant of comps that are in your neighborhood. And a lot of us, we think our neighbor's house sold, or the guy down the street sold, or whatever. And we're thinking that it just happened. And the reality is it may have been like 18 months ago. And we're not in that galaxy anymore. So hope this helps. My information's coming up. We always got bloopers. A little bit similar, but also substantially. Oh God, man! Going to take you through. This is a quick mic check. I don't even know if you call mic check when it's shut your computer. Nouns and verbs.